What's going on, Bullish Life family? Welcome back to my channel. A highly anticipated one today. Confirmation checklist video number 5. We're going to be going over institutional candles. Perfect. So let's get after it today. Before we go into any technical analysis, I just want to go ahead and remind you guys that this channel is for education and entertainment purposes only, right? Trading involves risk, and risk means potential loss. I am by no means a financial advisor. I'm just a random individual here on YouTube that's sharing what I've learned. But again, I simply share because it's helped me in my journey. I know it can help a lot of you. I know I get a lot of support. So I'm super excited for this video. We got a couple surprises. We got a couple surprises hanging out in the description. But before we even get to the description, right above that's the like button. So you got to go ahead and just smash that like button. In the description for this video, you are going to see a link to a free Telegram channel. I went ahead and put this together, do a little bit of analysis with you guys throughout the week, even drop some Zoom calls occasionally to be able to just do some one-on-one questions. Also in there, you're going to see a new link tree for me. When you click on that, you're going to be able to go check out where exactly you can roll into education, get basics, check out my other social medias. So I love y'all. I appreciate y'all. So much more to come. So let's enjoy this video, institutional candles. Right. This is where, you know, the big time players are getting in the markets. And we understand these big time players are institutions. So we got to think London, we got to think New York, right? So big candles, big wicks, these are where the institutions are playing. It wants to go ahead for this candle. You want to see it clear liquidity, right? And you also want to wait for a mitigation play. Now, mitigation, you may have not heard of this word before. It simply means break even, right? So come back and mitigate on an institutional candle is something that we're going to go look for, but we're going to dive deeper into that inside of the concept here, right? So we've already been pointing these out, right? We want to look for our area of consolidation, right? What's happening during consolidation? They're creating that liquidity pool of money, that double bottom, that W, whatever it may be. And then what they do if we're in an uptrending market, before they go ahead and continue the market up, what do? They got to sell to buy. So this sell to buy is going to create what we call an institutional candle, right? Now, again, this candle, it's a big candle. It clears liquidity, and we saw money get back behind the move, which means they dropped, right? For example, $2 million lot sell to drive price below all of these buyers, to trigger all the stop losses, to trigger all the other orders. What do when they're down here? They drop a $6 million lot buy, which pushes the market back up. But now they are in negative on their sell position because they had to leave it in. They're negative on their sell position. So what they like to do is come back and mitigate or break even on that institutional candle. And this is what we're going to look for. So there's 3 main areas that you could enter on an institutional candle, right? You have an aggressive entry, which could come at the wick of the candle, the highest point. You have a moderate entry that could come at the open of that candle, or you have a 50% safe entry that comes at the 50% of that candle, right? And, you know, just by theory, we're going to throw a stop up underneath the low of that candle. So drives below liquidity, money gets back behind the move. We see that evidence that the banks got back behind it, right? So candle moves down below liquidity. We see money get back up behind the move. And what do? They break structure. They trade above these highs up here, which shows us that we made a higher high. So now we wait for any retracement pullbacks. Now, what are we going to look for on a pullback? We want to look for, right? Let's go ahead and talk about the open in the 50% of the institutional candle, right? Let's also talk about the imbalance that was created right here when they had to have the big money move up, right? So we have imbalance right here. And then above the imbalance, what you're going to see is them create wicks of liquidity. And this is why I said it all ties in together. So while in this uptrend, they're going to create all of this. And one more time, they're going to drive down, create another institutional candle, mitigating an institutional candle, right? So that's as simple as we can really put institutional candle, drive down, open to 50%. And then you want to see the market go ahead and trade above those recent highs. Now, we're still not going to touch on this. This is extra confirmations. But again, you want to buy below 50% discount, which is talking Fibonacci retracements. So if you take it from low to high, right? Where do they create the money? Right at the 50%. Look for entries below the 50%, but that's going to be for the next video, right? Overall, this is what you want to do. Understand there's 3 entries for an institutional candle. It needs to clear liquidity. It has to go with the trend, your weekly, your daily, your 4-hour. But this should make sense to everybody, right? We had all our confirmations here. Boom, boom, boom. Market goes ahead and trades higher, right? So now we're going to walk through. First example is going to be GJ. We're going to touch on gold, and we're going to touch on S&P. Right now it's Monday morning, about Monday at noontime for me. I'm going to go ahead and edit this throughout the day, drop it on Tuesday for you guys. I'll give you a sneak peek. If you haven't already checked the description, and if you haven't done that, you got to click the like button before you go into the description. But you guys are going to see this Telegram channel here. I don't even know how it already has 6 subscribers at the time I'm making this video. But I dropped some charts to start off the week. A couple things I played out last night, but this is where we're going to keep, keep together with everybody, right? So let's dive into it. We're going to dive into GJ first. Now, let me go ahead and delete everything. We'll go back to the daily just to figure out where we're at in the trends. Perfect. So we're going to go back to the daily, figure out what type of trend we're in, right? As we are looking at this, I can see that we're obviously in an uptrend, right? We've been trending up since the end of June. Overall, over the last 2 weeks, we have pretty much been trading sideways, though, in this sideways trading range. Now, again, this is a range of 175 pips, but I'm personally just not a swing trader on the daily, so I'm not going to worry about it. But overall, uptrend right now, we're consolidating. Here on the 4-hour, as we look at price right now, right, I could pretty much see that we had, this trend line of money going on. That's even back here. We obviously have a lot of imbalance to work with, but overall, we're bullish, moving sideways. All right, so now coming down to the hour time frame with a bullish bias, I went ahead and just run into replay mode. This was the open of market, right, at 5 p.m. on Sunday. So market opens, and I'm going to go down to the 15-minute. I'm going to show you guys that this is a perfect example of institutional candles. So just wait with me. Be patient. I had to do the top to down analysis for you, right? To go ahead and walk through what price action did Sunday night going into Monday morning, right? Bullish bias. This is our lowest low to work with. So if you're going to buy this for whatever reason, I mean, you want to be mindful that, stops are hanging out, right up underneath this low. What do? We come trade up near previous wicks, previous highs. So this creates, as we know, that pool of money, that pool of liquidity, that for bullish bias we could come take later. As we see price making right now, but they did come just sweep the open of the hour, right? This is literally a low, and it swept this open of price. Now, look at the cool thing. Look how this candle looks. Does this not look like it could be a nice institutional candle, right? Go ahead, right at 9 p.m. Go ahead and sweep down below a low. And now we just got to watch price action. If we see evidence that market wants to trade higher and break some structure, then we can maybe think about this. So let's let market play out, right? We're still only a couple hours into the markets. What do we do through pre-London? We slowly trade up into and over this pool of money, right? Let me go ahead and play out. What do? We trade up over the pool of liquidity into an area of imbalance. Now, again, I'm not looking for the sell. I'm just showing you guys that it works both ways, right? Into the sell and into the open of that last up candle before the big down move that came up and created pool liquidity, imbalance, open, perfect sell opportunity. If you're taking that sell opportunity, right? Right at the 138.80 level, right? Love your 80-20 levels. Love your 80-20 levels. So beautiful confirmations there, but that's not what I'm looking for. You could wait till core London for 415, 430. And what are you going to do? Open 50% of your institutional candle, right? And as you see, right at 415, they show evidence that they trade down below the entire pre-London trend line of money. They drive below it deep into the candle, right? You want to talk some Fibonacci retracements? We'll talk a 79.88 retracement, right? What do? We show evidence of trading at the highs, and then the market's simply just going to you know, go take whatever liquidity it wants to that day. So we had a nice, you know, reaction during New York. So perfect. Buy opportunities, da 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 da. We get up here and equal out all these highs, and then we basically get that one up candle in markets. But I've been, you know, we were out of this, right? We took this, we got our targets, right? The market could have continued to moving up. It decided to reject off that 139 whole level. And there were a lot of sell opportunities through New York. I just didn't trade New York. I took these London setups. So, and now I think the market's traded back down into where we were last night, right? We came and traded even lower than the pre-London low, right? So beautiful opportunity there on GBPJPY, just showing you guys how institutional candles work inside of the market every single time. Same thing happened with gold last week. So this is beautiful. I'm going to keep these markups on the chart. You guys have access to them in the Telegram now anyways. Overall, beautiful plays last week, right? What does gold do? Consolidate, equal lows, equal highs. Last week, we see a nice one candle drive down below the liquidity, right? What do we see? Money get back behind the move that next hour. So now what do you want to look for? Down into the 15-minute time frame, right? Here's our institutional drive down below the liquidity. We see money, I'm gonna go ahead and delete this blue box. We see money go ahead and trade above the structure, right? This was the sell structure. They trade above the sell structure. So now what do? You wait for a retracement down into the area of imbalance, into the open or the 50% of the institutional candle with a stop loss up underneath the low, right? And what are you going to target? Equal highs. And I didn't even pull up the risk to reward on the GJ trade, right? So for golds, you know, sometimes it's normal to risk 100 pips, right? And your 3-to-1 would have been right at these highs. And what did we do when we reached that 3-to-1 ratio and those highs, right? We pushed through the liquidity, right? And now we're falling back down. But that was a good trade. From there, let me just go ahead and show you guys that risk to reward on GJ real quick. We'll pop back to it, right? So you would have done an entry here at the open, stop up underneath the low, 13 pip stop, and where's your 3-to-1 ratio? Right here at the equal highs. Perfect. Right, one last example before we end this off. S&P, right? Beautiful. Go back to the hour. So plays just things from last week, right? 3,400 is the highest we'd ever been at. We sold off heavy, almost filled this 4-hour imbalance. We played off the open. Now this is key what we did playing off the open, because what happens here? You have a pool of liquidity over here to the left, right above an imbalance. What do? We get a single candle down below that liquidity, right? And then we slowly trade back up. So this is really nice on a 15-minute time frame. But again, what happens? 15 minutes of buying, or 45 minutes of buyers. What do? They drop the buyers in one institutional swoop down, one institutional sell, take most of the people out of it. What do? Create a new low. They come and trade back above that original sell area, right? They're going to consolidate and hang out for a little bit. We see the evidence that they come trade up at equal highs. So what happens? They pull the market back down below. This is just like the GJ thing, right? Below this entire area of money, they come trade into the 50% of the institutional candle, right? If you were talking retracements, right? We create the pool of money right at the 50, 60. We come trade into the 70, 70.9. Institutional mitigation candle, to do this one, we go ahead and trade higher above the highs, and it happens again. What do we have lying right here? We have imbalance. We have an institutional candle. We create money, we trade into it, ran a little bit deeper, but overall a higher low, and market continued all the way to the upside. Now, what's crazy, I got to delete this. What's cool about what happens throughout all of this, is we go ahead and trade all the way back into what? An up move, a buy to sell that created imbalance, to where if you're bearish, you could potentially be thinking of a entry on a sell and a stop loss above the high. What happens when we get up here? We have a buy push up, we come trade lower at structure, we come up and retrace, and we sell back down into, like I'm doing, not to do everything for you guys here, you know what I mean? But look, imbalance, institutional candle, open. What are your targets? Equal highs. Like, I think that's a mic drop on this video, to be honest. Like, y'all, it's over. It's over. So institutional candles, right? Simplified as possible. The banks come in to go ahead and make a fast movement so they can take out the majority. And we want to see them go ahead and move it the other way. We want to see them clear liquidity. We want to see money get back behind the move, and we wait for that mitigation to come back into it. But I appreciate y'all. I love y'all. Thank you for going ahead and smashing the like button. I hope you guys enjoyed the Telegram. There's a lot more to come. Excited for more confirmation videos, but let's go ahead and continue to live bullish this week. I'm excited to see you guys in the chat, and let's get it. Much love.